Hello students, welcome to our video lecture series. Today we are going to discuss banking sector reforms in India, and let's start. So when we have the LPG reform of 1991, so to complement that reforms, the banking sector reforms were also needed. So see, banks occupy a very important position in any economy. Like here, converting saving into investment. Whatever saving bank receives, many of them they are invested in other purpose, or some of them they lend to other people. This bank plays very important role in any economy. So when we were going for our LPG reforms, so during that LPG reforms, the banking sector reforms were also needed. So in our economy, M. Narasimhan committee was appointed for the banking sector reforms. He is M. Narasimhan, and he was the former governor of RBI. And under his chairmanship, in 1991, the Committee on Financial System were appointed, and that committee suggested some of the reforms, and that reforms were very much important, and government tried to implement all these reforms, and that reforms was very much successful in the financial system reforms our country. So later in 1998, the same chairman was appointed for banking sector reforms. So in our country, we have two banking sector reforms committee under the same person, M. Narasimhan. So first of all, we will discuss the some of the recommendation of M. Narasimhan Committee 1, that is Committee on the Financial System, that was appointed in 1991. Let's see. So recommendation of Narasimhan Committee 1, that was appointed in 1991. So his first recommendation was phasing out directed credit response. Government used to provide the credit to farmers and small industries after the nationalization of the bank, because earlier bank used to give the loans when where they think there is profit. So they were not providing credit to farmers or small industries. So after the nationalization of the banks, government was providing credit facility to the farmers and small industries at concessional bank rate, concessional interest rate, we can say it as. So means it was benefited for the farmers as well as the small industries, but it was not beneficial for the banks. So M. Narasimhan suggested that we have to phase out that directed credit response. Means government should not intervene in deciding the interest rate in the banking system. Bank should decide who to give the credit and what percentage they should give the credit. So first recommendation was phasing out directed credit response. So currently till now the process or the same system is continued with less or some reforms in it. Okay. Then second recommendation was reduction in CRR and SLR. So first of all, we must understand what is CRR, and next is SLR. So CRR is cash reserve ratio, under which a bank need to keep its money with the RBI in the cash form. So it is called CRR. Currently its rate is 4%, and SLR is statutory liquidity ratio, in which the liquid asset bank should keep with itself as a reserve, and currently its rate is around 18%. So when Narasimhan committee recommended to reduction in CRR and SLR, when SLR was 38.5% and CRR was around 15%. So we have reduced, means in 1991 it was reduced to 15% SLR, and CRR was reduced to 3 to 5%. Now currently in 2024 its rate is 4% and 18%. So it is means Banking Regulation Act and RBI Act 1934 that make compulsion to the banks to keep CRR and SLR. So Narasimhan committee recommended for reduction, means they doesn't say phase out, they suggested in reduction in CRR and SLR. If CRR and SLR are reduced, then the amount apart from this 4% and 18%, apart from this percentage of the capital of the bank, is available for the bank for its banking purposes. So and Narsimhan committee is recommended for reduction of CRR and SLR. So third recommendation was removal of dual control. Means in our country, banking system was regulated both RBI and the government before 1991. Means regulation of the banks was under dual control, Ministry of Finance or and RBI. So therefore, some of the purpose bank need to take the permission of RBI, and for the some of the purpose bank need to take the permission of government. This, for example, to decide the credit facility to the farmers, Ministry of Finance says this should be the interest rate. If a bank need to open a new branch, then bank need to go to RBI. Means for some purpose bank need to go RBI, and for some purpose bank need to go government. So during with this dual control, bank was losing its efficiency. So Narsimhan committee recommended that this dual control need to be removed, and all the control should be given to the RBI. And currently all the functions of the banks like bank rate, repo rate, reverse repo rate, or LTRO, this type of this banking function is under regulation of RBI, and interest rate is decided by bank itself after 2010. So latter is interest rate determination. Means as I said, interest rate were controlled by government. Means under the priority sector lending, currently priority sector lending is also in the function, but interest rate were controlled by the government, and government decides what should be the interest rate for what type of the persons. But after that, Narsimhan committee recommended that interest rate determination should be in the hand of that particular banks. Means a bank very betterly known who are their customers and what type of the interest are with that customers. Means which type of the customer will provide profit to the banks, and what type of the functions, or who, if bank given the credit will, means the money will get back to the banks. So it is better that bank should decide interest rate rather than the government. So Narsimhan committee recommended interest rate determination should be with the particular bank, and currently particular bank decide the interest rate, not RBI or not the government. The next recommendation is more freedom to the banks. More freedom to the banks means here managing directors and board of governors of the respective bank should be given to adequate leverage to undertake certain necessary improvement in the bank's financial health and enhancement efficiency. So in our country, in 1996, in 1969 we nationalized 14 banks, and in 1980 we nationalized 6 banks. So there were nationalized bank or public sector banks. Means in this bank more than 51% of shares held by government. So in the board of governors, the government has very much say in deciding the bank's financial matter. So due to which the government intervention in the banking daily function was very huge. Narsimhan suggested that more freedom need to be given to the bank. Means this managing director and board of governor should work in interest of that bank rather than what government is saying to do them. So if the bank is provided more freedom or autonomy in their functioning, then bank can do very well and efficiently, functions efficiently. So the Narsimhan committee recommended for more freedom to the banks. Then establishment of ARF tribunal, Asset Reconstruction Fund Tribunal, under which there was a problem of bad loans. Bad loans means that this type of the loan is not recovered by the bank. This loan is called bad loan or non-performing asset. If a bank has provided loan and for 90 days the person has not paid the interest rate, so that bank account is called as NPAs. So it was very high in the financial sectors. So to solve the problem of bad loans and NPAs, the Narsimhan committee recommended to form Asset Reconstruction Fund Tribunal, under which the bank who are under the problems of bad loans or non-performing assets or NPS, that can transfer their bad loans or NPS account to the ARF tribunal. ARF tribunal will recover that bad loans or NPA accounts in on behalf of the bank, and in return bank's balance sheet will be clear and bank will be able to perform very efficiently after these bad loans and NPAs has been removed from the balance sheet. So that ARF tribunal will recover the bad loans on behalf of the bank. For that, bank will provide some cuts or some percentage will be provided to the ARF tribunal. So before some years ago, in 2016-70s, the bad bank concept of bad bank was in news. Means to establish bad bank. If we establish bad bank in our country, so most of the banks who are performing or who have the problems of NPS or bad loans can transfer their bad loans and NPS to the bad bank, and bad bank will recover that loan. But in our country, this was in news, but currently no any bad bank has been established or ARF tribunal has been established. So next recommendation is reorganization of banking sector. Reorganization means we have to reorganize the bank sector. What was their recommendation? So under its public sector bank should be rationalized by carrying out mergers and acquisitions. Means those banks who are not performing well should be merged with other banks, and acquisition of some of the banks. Means mergers means, for example, before some years ago, means 2 to 4 years ago, Bank of Baroda was merged with Dena Bank, Vijaya Bank. Vijaya Bank and Dena Bank was not doing well, so these banks were merged with. So currently, like that, other bank means SBI has 7 subsidiaries bank. That 7 subsidiaries banks now has been merged in the SBI, and Bank of Baroda, Vijaya Bank and Dena Bank has been merged with Bank of Baroda, and currently nationalized number of nationalized bank is 14. Currently it is 12. Sorry, currently it is 12 banks. Means most of the banks have been merged in other banks. So merger has been done. Later acquisition has also been done, and later it also should license the private bank if they meet regulatory criteria. Means M. Narasimhan suggested for going for private banks in our country. Means in our country we have 20 public sector banks before 1991. So M. Narasimhan says that for more financial for financial reforms, he suggested to give license to the private bank. So after that, the private banks was provided license in our country, and in 1993 onwards, various private banks has been come to our India. For example, Citibank is also one of the example of private bank, or Kotak Mahindra Bank, Axis Bank. These are the private bank that was established after this committee's recommendation. Latter recommendation is 4-tier banking structure system. 4-tier banking structure system, in which he says consists 3 to 4 large bank including SBI with a domestic and international presence. Means in our country we have 20 means public sector banks, cooperative banks, some regional rural banks, and means these are the some of the banks types in our country. So he suggested 4-tier banking structures, in which for upper means in the higher tier we need 3 or 4 large bank. Means that bank should be so large that it should have domestic presence as well as international presence. Means currently only SBI, State Bank of India, is in top 100 banks of the world. Means only SBI is top 100 means world's top 100 banks includes only SBI of our country. So it need to be 3 to 4 at least large bank at the higher level, followed by mid-sized bank and niche bank with an economy. Means in the second tier then there should be mid-sized bank. Means some banks that should not be large than first tier, and that should not be small than third tier. In the third tier he suggested for third tier would include old private sector banks, regional rural banks, multi-state urban cooperative banks. Means in the third tier there should be cooperative bank, mostly urban cooperative bank, regional rural bank and private sector bank should be in the third sector, and the last sector that should be present at rural level means in the include the many small privately owned local bank and cooperative banks, or the banks that are functioning at the local level. So this should be the four tier structure of the banking system in our country. The government is trying to implement this four tier structure in our country, but the government has not implemented as M Narasimhan suggested in his recommendation. So these are the some of the recommendation of Narasimhan committee 1, and in the next video we will see the recommendation of Narasimhan committee 2. Thank you.